So today's thing is I just wanted to give you more detail, little bit of structure, which is a theoretical part of a salary structure. I'm assuming you must have seen once your Form 16. If not, these are the tax brackets and the rules will be there in the Form 16. Form 16 normally comes approximately, I can say, May end type. So that's one thing. And but you all will may have it in your office. It's called a projected Form 16 kind of it, or draft Form 16, which you can easily go through, or you can check your last years if you have it. So this is the another thing which I have noticed it. What are the things can come under tax planning? Okay. So tax planning is the beauty of that is how to protect yourself, and but still it can give a benefit of the tax planning. So protection is the one thing which I always try to see, that how you can manage your money, how you can take it. So sometimes there is a very different view on what is the protection of the money. Yesterday somebody called me and said that, Rachna, I don't wanted to take a risk, and I was speaking to one of the vendors and they said me that they will be giving me 25% return guaranteed. And without a fraction of a second, I said, please go ahead with that person, because I don't think so it is possible for me. Neither it is allowed as an advisor or a PMS company holder to give a guaranteed of any funds and then to which is a market link. Still, no, they told me they are protecting. So sometimes I just wanted all of you to be aware of. I'm not saying somebody is telling lies or somebody is mis-selling things. Attend lies on us, how we take that communication. And best part for you all is, I always believe is, you have a Google, please search it across. The concept never goes wrong. And the same thing is, if something is protecting you, if something is giving you guaranteed funds, it has to be in some ranging. So there's a protection of the funds, and the planning is more here. I'm talking about two things, which is, of course, a part of a tax planning is your health cover and a life cover. So that's the one thing, your protection and the planning, you should take care of it. Very, very important. New trend has come. You can take a top up health cover. Okay. That is very nice. You can claim yesterday, last 1 week, somebody called me and he said, my husband is planning to exit the company. So I was having till now the company health cover. Now I wanted to take additional health cover. And then can I take the top up? So that is another things. Most of the time we don't know. And we have noticed sometimes that if your parents and others are not being protected, so please make sure that your health covers are being taken care of. Previously, I used to say that people maybe year or 2 years back, 10 lakhs was enough. But after COVID, I have been changed my thoughts. I believe that at least keep the top up together at 25 lakhs. Very important part on emergency funds, or we called a contingency plan. Contingency plans can come anytime. It can be for a business people, it can be for personal, it can be for salaried, it can be for anything. So we don't know where we need a contingency. So suddenly somebody have called me that she's a single person, 56 years old, and told that, Rachna, I was a consultant, and that person has told that they are not renewing my agreement. So how to manage it? Because I don't have anything as on today to so-called can take care of more than 6 months. Then because everything she has is only in FD, PPF, and land. So that is another learning I always keep and telling that. So my intention for these webinars is also is what I understand, what I speak with the people. Let us not reinvent the wheel. We try to do it, learn from others, and see is it if we can learn and do something. So similarly, have a contingency plans for more than 6 months of your household expenses. So you don't have to worry about much and take care. The good things favored her is market is all time. So I said, okay, book the profit and make sure the next 6 months you have a good contingency plans, and by the time you can get something what you're looking for the consultancy. But emergency fund, you can say, or a consultancy, it's not necessary is only for a job loss. It can be for anything sudden coming, because another person who told me that I had a sudden emergency for an health for my dad, and I had only 10 lakhs covered, but the total bill has come 18 lakhs. And yes, sometimes you don't know, and 8 lakhs was a huge amount, how to manage it. So then we took it something from a contingency and then be able to manage it. So these things sometimes it keeps coming where we are not planned. So make sure that you have a good contingency plans. Concept wise, you can say 6 months of your whatever you can say expense kind of it. So let me give you example. If you're spending 70,000 or a 1 lakh for a house per month, so keep it at least 6 lakhs as a contingency money. Contingency money can be in your FDs or a debt funds. Add flexibility to your plan. Very, 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 very important. This is the another thing which is I have noticed in not only for a tax planning, for a wealth creation, for anything. People don't have a flexibility in your plan. So I'll give you today morning example. I had a 9 o'clock to 10 o'clock one customer come from US for the vacation. So he wanted to speak regarding wealth and PMS, and then I was asking him what is your normal investments. So he told me, Rachna, I have only two investments, and then two, it's a very huge portfolio actually. I mean, 5 CR and above. And I said, what exactly you do? So he said, I have purchased only two things. I have only in FDs, or I have a real estate. So, and another one small amount is in insurance. Then I said, in case, because the parents are old, and I said, in case if you need a 10, 20 lakhs, how you will be able to take? He said, I also don't know. And I was very surprised. The person whose net worth may be 20 CR plus with so many real estates and villas and plots and everything, but doesn't have a flexibility of 10 to 20 lakhs. Okay. That has to be there in your portfolio. Please try to understand the things which is fixed, like in insurance or in real estate, or you can say PF money. It's not, you cannot redeem it. It is good to have a debt portion which is linked to your retirement, but you should have any portfolio. I can say, I normally say 40% to be on the fixed side, but I'm saying even a maximum, if you stretch also, 50% of your flexibility should be there to remove. Even with an exit loss or anything, you should be able to remove the money what you have. 50% can be fixed in the, you can say in a real estate, you can say it is in your insurance or anything else. Even PF is a longer term, but you should make sure your flexibility is added to your plan. Whenever you are doing a tax planning, please add it across. Whenever you are doing a tax planning, there are few things people come across, and these are the tips I wanted to give again. Try to ask few questions. Is it you have to pay yearly? Like if you are having the insurance, you have to pay yearly. If you are having a ELSS or PF, you may have to pay one time, and next time you have to pay minimum. You may have to understand what are the returns are taxable or non-taxable, like FDs are taxable, NSCs are taxable. So you should know what are the things you are doing is taxable or a tax-free. When you are getting the money, is tax-free or not? So these are the things you should ask when you are making a tax plan for yourself, and then you should be able to take care of overall label. This is the best part of it, which I am doing and I'm enjoying myself. Then he asked me, coincidentally, we both parents were in army, and then we were talking about Kendra Vidyalayas and other things. And then he says, how you joined from IT to financial side. So I said, no, the best part is I took the things and I just work for 4 to 5 hours. Rest of the time, I love speaking to people, helping people, and the money works for us. So that is the how money works for us is like when you start investing when you are young, your interest, your compounding effect is taking care when we were around 45. and we both made it around 45 onwards that we get a monthly income. And then I don't have to worry about my lifestyle. So my normal lifestyle around 1.5 lakh, I get it from my portfolio. So that's where your money start working. So the best part I can say you why we started this, because previously it was a 1 lakh when we started working. Now it is 1.5 lakhs for ATC. If you start investing a 1.5 lakhs I used to always feel nice that at least for the sake of tax planning, we will invest, and then you don't know, we will use that money in a better way. So that is a good thing, which create a good corpus when you are young, even though that time you didn't like it because it is actually going and you don't have a much of surplus income. But you don't know, because of tax planning we were able to get a good money, and that money is been giving a wonderful returns, and that money is working for you. Actually, you are not working for the money. Building alternative income stream is a very important part of it. In the olden days, I if you think about, or when I see my parents or other people, I always feel that alternative income, they used to think about, okay, I will have a 1 or 2 houses where rent will start coming to me. They may have an NIC pension plan kind of it. More than anything else, they were privileged, I can say that. The government used to give them a very good pension. 2003 onwards, people stopped having a pension. 2009 nowadays, even the banker doesn't have the pension. So they didn't have a much option because they got a privilege of getting a pension. So for all of us, there are only few ways to make a alternative income. Of course, if you are in a business stream may give you the alternative, but most of the people who are salaried is can be, I can say, rental income is a part of it. Your portfolio giving the returns month on month is the what we do. And third and the last, not more, is talking about the pension plan. I always believe these not word pension plan, I will say that monthly income plan or a regular income plan is the best way, because they are going to give you till you're 85 or 99, and that's a basic, your things are taken care, even war comes or market goes down, doesn't matter. But yes, your basic needs are being taken care for the long term. We never actually give the importance to the deferred income. This is the person I spoke a week back, and he says there is a lot of, I can say, because interest rates are good, and nowadays this guaranteed pension plan, or we call a monthly pension plan, is giving 6.8% returns tax free. And of course, it's always our thought in a right horizons, at least whatever we like, we recommend to the customer, we buy in our own portfolio first. So I was telling the same thing that we have our own portfolio, and of course, we are getting those. I said 6.8% tax free return is actually indirectly 10 and a half of a FD. And then too, it is going for a 35 years, almost like you pay for 10 years, and 12th year onwards, you're getting for the next 25 years, is the best thing, because you know that 60,000 per month is going to come to me, irrespective of whatever happened. Then he says, no, isn't it you're comparing to less interest when you're having an equity? So I always says that you have to have a net off between what is a debt product and what is an equity product. So one thing you have to realize, the interest rates are going to go down. Second thing is, as the developed country, you can see any of the developed country, most of the developed country, the inflations and the growth will be coming to a closer to 2 or 3%. And the same thing India will be, you can see the interest rates are going to go down, and we may not be able to sustain for the next 35 years 6 to 7% returns. So FDs will be at 3, 3.5, or you can say bonds will be coming at 4, 4.5. So if the bonds and anything is giving after 5 years, 10 years, how you are blocking for the next 35 years? So you have to link approximately when you're talking about your tax planning. Overall, the period is what I can do it for my goals, but it is helping me in my tax planning also. For example, I'm just saying you think that, okay, I wanted to take care of a retirement plan. So retirement plans comes under ATC. If I wanted to take care of a health, the health will take care of an ATD. If you wanted to take care of a health plan for dependent parents, how they can still take care of an ATD. So how I can take care of an NPS. So try to look always investment which is linked to your goal, but helping you in a tax planning also. It's a 1 plus 1 win kind of it, both wins. Few small changes can make a big difference. Very, very important. When I went last week, one of the corporate for the training, and which is a very common thing. I get it from everybody, from the youngsters, that now I don't have money. How I can save the tax? So it's better tax goes off. Okay. So I keep telling them, of course, it's not so easy to do it just because our salary doesn't come higher on the January time. It's always good to make sure that we do over the period and proof time we give it across. But still, you can have an options if you have a savings to convert into the different tax saving. But more than anything else, we have to change our lifestyle. So even it is, you can say health, if it is says about your overall sports or anything, even finance is the one of the best example is how you cut the means expenses. So I'll give you a simple example. Yesterday, and I was talking to my son, and which I felt how the difference is. He is a 15 years old. He was trying to get some food from outside, and he's explaining me. So in this app, no mama is the we will get 150 rupees off if you buy some other thing for 400 rupees. So you buy something more of the food for 400, I'll get the 150 bucks. And I was telling, when you don't need to eat that much money, you're just buying for yourself. Nobody wants to eat. Why you want to spend 400 more? And just going to save 150 bucks. So most of the time, this happens very common. We normally try to see what is my discount. Instead of saying, okay, you will get 30% discounts if you buy for 5,000 rupees. I may not wanted to buy a 5,000 rupees. So why the hell I should spend now to just get the 30% off? So please try to understand the small things, how to do it. At least I do the same thing and I explain to my kids and all the stuff. Buy what you need. It's okay sometimes if you, because in the full year something or other discounts keeps coming. When you wanted to buy, that time you see which is the best rates you are having. Don't buy things because they are coming as a cheap, because you don't need those things. Most of us will start saying, okay, this is a Flipkart sale is coming, this sale is coming. What you wanted to buy? And I said, I don't wanted to buy anything. So I don't need it's a sale coming or not sales coming, because I have seen nowadays throughout the year sales are happening. So please buy what you need instead of buying because you're getting a more discount, you're buying it. So another customer came to me and they says that actually I have my own house, I'm a debt free, but I want you to explain me how to be tax efficient, how to make sure that I will be able to reduce the tax. So I said, okay, you show me and let me know. It's a very similar age and wanted to do a financial planning. Then he says, I wanted to, because when we were trying to find it out, you find a goal. He says, yeah, I will wanted to buy he is 54. I wanted to buy a house, which is around 3 crores. And I said, why you wanted to buy a house? You already have a house, you have additional plot also. And why you wanted to do? Because now you want to increase the debt. Your loans will come 15 years, you will have a lot of issues and all this stuff. He says, no, my friend has told if you take a home loan, you can save tax. And this is what I have made a mistake, I can tell you, in 2001. And I told then and there, please sometimes don't buy something to just to save tax. Because the same thing I have done it when we got married, we were having no kids and we were earning quite good. And that time, if you have a rental income, there is no slab. You can get the interest, whatever amount, as a tax free. So I took the second home for a loan so I can get a tax benefit. But when we got a kid and I wanted to quit, I was not able to quit because one salary, two EMIs cannot go. And it's very difficult for me to sell that time. So many times I have seen people to just save the tax, they take one big liabilities or an asset which is impacting them in a long term also. So that is another learning. Please try to see how you can have an efficiency on the taxation But just for the tax savings, please don't buy. That is the one of the biggest learning I have done it. And I wanted to tell everybody that please don't do that. This is a very simple rule. I always tell people to have it across. How you can say that what is the returns you are expecting, or how you can make sure that what kind of money you are in a years you wanted. So, for example, if you are saying that anytime, so 72 divided by the returns, if you are having a returns of 10%, your money will get double in 7.2 years. Okay. And if you wanted to keep the money for 6 years, so if you say 72 divided by 6, so indirectly you will be having 12 years. So this is the called the making your double the money. So whenever this is the way, it's called rule of 72. It's easy to know. So I can give you the simple example. If somebody told me the NSE is giving a double the money in, I think, 9.5 years. So you can do 72 divided by 9 years, and that's where you will say around 8% you will get it across. This is the, I'm still going to give the concept, but I'm just trying to say how you can take care of tax planning is not to wait till December and January. Try to start from the 1st April onwards. Save a minimum of 20% of a tax planning. Do the SIPs on a ELSS funds and regular. Taking loan online for that good term cover to take care of protection. Make sure that you get a good health cover with a top up. Nowadays, top ups are coming very, very good rates. Please do that. Take care of it. Tax declare as per your regime. I will going to talk about regime. Very important part of it, because as per the new tax law, you can't jump more than once from old to new or new to old. So please take care very carefully what you are going to do a tax filing. Okay. So how to have a financial planning and your tax planning will achieve your financial planning. I'll have a small video. Please tell if you can hear.
For building a house, it is essential to create a perfect blueprint for the same. Similarly, for building a wealth for you and your family requires you to build a financial blueprint, also known as financial plan. Here are the 5 steps of building successful financial plan. Planning for uncertainty. First step is to protect yourself from uncertainty by buying required insurance policies to ensure that any uncertainty do not eat up your savings. Build contingency corpus. Second step is to build contingency corpus up to 6 to 9 months of your monthly expenses. This will protect your long-term investments from the contingencies like loss of job or slowdown in business. Set financial goals. Third step is to set financial goals and find out when and how much money would you require to achieve these financial goals. Create portfolio. Fourth step is to select right asset class and product to invest and to achieve your financial goals based on the time horizon and your risk appetite. Portfolio review. Fifth step is to review your portfolio periodically and do the necessary adjustments into it based on the remaining time period to achieve each goal. To create a financial plan and to review it periodically, always take the help of your financial advisor. Mutual fund investment.
So this is the another thing I want you all to, which I have given the last tip also, how to read the Form 16, 26AS. And nowadays, last year onward, it is always started an AIS also. Okay. So annual investments data, you will have it. Lot many have started getting a notices because the difference between AIS report and 26AS. So you should, first thing is, if you know your own tax filing or CA is doing that, first make sure that your 26AS and AIS is being same. So I'll give you the difference between Form 16, 26AS and AIS. Okay. Form 16 is normally when you're working as a salaried income. They will give you what is your income, what is you have shown as your tax planning. So ATC, ATD, PF, PPF, and whatever taxable, and they have cut the taxes. So what are the income normally comes across? You can get it from the house property. If you have taken a house loan, you will be showing that house interest coming across, which is the chapter 6. So you will be having income from business and profession. Most of the time, salaried people will not have this. But if you have this, you will be giving as a form 3, which is ITR 3, which is a business income, proprietary, and others. Of course, if you have a consulting income, there also you will be having a business income. The good point in a business income is you can set aside the expenses. So you can reduce the tax as per your expenses. Income from capital gain, very important part is the tax efficiency is capital gain. Capital gain is from your shares, your stocks, the mutual funds, the bonds. These are the things which comes under capital gain. And other sources, very important, lot many customers has got the, I can say, notices on the other sources, because they must have got FD interest, SB interest, you have a bond interest, some dividend has come. Previously dividend was not tax free, so it was a tax free. A lot of people have not shown. Actually nowadays dividend is taxable at the hand of the investor, so you have to do. So that is very, very, very important. I can say around 10 to 15% of the people whom I know has got it because of other income was not shown. I can say now the things are very tightly coupled in the tax filing places. So they are trying to link with your PAN to the bank, bank to DMAT to your tax. So the difference between Form 16, 26AS and AIS is Form 16 is for your salary income. 26AS is the statement whoever has cut the TDS for your PAN, you will get it under 26AS. Okay. So 26AS, I'm just giving example. If you have, so till last year, previous to last year, for example, somebody have the tax from the FDs or saving banks, it's not gone above 20,000. So TDS was not cut. So they forgot only that, okay, I have to pay a tax on that. So the tax, if the person has cut in your PAN, then only 26AS comes. Otherwise, it doesn't come. But you are still liable to show that income, even the 26AS doesn't have. AIS is the place where all your sale transactions and other transactions comes, which may have a taxation, may not have a taxation. Okay, that is the details of AIS. So indirectly, we have to look the AIS, make sure it is showing in a 26AS or not, means tax cut or not. If not cut, when you're tax filing it, add that part of it. AIS is a very new, last year started, so there are so many differences still there. If the notice comes, you can give the detailing. So I'll give you example, because last month or last 2 weeks back, one customer came, there's a difference in 18,000 odd. What we have given advanced tax calculation versus them, because AIS take the end of a day tradable date. For example, if my tax advanced tax says Infosys I have sold at $1,600 or 1,620, and that day last trading day for Infosys was 1626. So AIS takes at 1626. We got a few more error in AIS is because it is accrued versus actual. So somebody has declared the dividend or an interest on 31st of March that we will give it, but the money has not come on actuals. So in AIS, it shows that you have already received and you should pay the tax. So these are the things sometimes you have to make sure when you are trying to do when any of your wealth advisor or the portal of where you're using 26AS advanced tax on capital gain is matching with your AIS. What are the sections which is available? Very, very important. 3 sections I wanted to focus on today. ATC. ATC is 1.5 lakhs. Please make sure it happens. Most of the time, PF, PPF money with if you have a housing loan or tuitions will always take care. Otherwise, the things which comes under ATC investment, I will take care in the next slide. But it talks about anything. It can be LSS, it can be FDs, which is only for an ATC. It can be your insurances, these NSC. These are the things which can come. National pensions scheme is a very important. I love that because it is creating at least your one more corpus for your retirement. So you should take care of, I can say, NPS. If you don't have a company which is enabled for an NPS, you can do at least for 50,000. If it is enabled, you can take care of 10% of your basic also as a part of an NPS. Medical insurance, very important again for a dependent and for yourself. These are taking care of your protection, as I told you. Please take care of a good medical premium. These are the three things most of the people take care, and I say it is good to utilize all the three sections. If you have a home loan, you try to take a section 24 with the home loans. Here now the change has come last few years. Now limit for rental, limit for the, I can say, self-occupied is 2 lakhs. But if you and your spouses both are working, you can have a joint home loan and joint loan, joint house, then both can claim 2 lakhs each. Okay. So these four are very important part people have been using across. Apart from youngsters, if it is an education loan, interest are no limit. You can take it however you want it. This is the another thing I have learned recently, which is very good. So a lot of customers, they are taking an education loan for your kid. Okay, so that is another things. If you are paying the EMI and you wanted to claim, you can also claim for an education loan. This is the new regime versus old regime. I keep saying that. So this is the part I feel without fail, if you have a home loan, please make sure you go for the old. And if you have no home loans, then depending on whatever your slabs are, you can just take care of proposed win. I have been taking still, even though I don't have a loan, but I have continuing to take care of my old one. The reason is I wanted to do the tax planning and save the money, and I always feel that's a better option for me. I can anytime move to the new regime, but that's the best way to look at across. It's the same scenario as I told you when it is good. First time the loan, if it is not there, the I can say the second or a new one works well. Otherwise, the having the loans is without fail, it works in your favor. Tax for a home, it's very important. HRA exemption, please do take care. If you don't have it and you have your own house, so then it is good enough. LTA can be claimed depending on a lot of. Recently, I went to the another company. They didn't have an option for LTA and LTC, but if you have it, you can claim that. It is another good way to save tax. I keep telling you all, the tax planning, the best part is to know. I know so many people can reimburse for your mobile, you can internet, they have a food coupon. If you have grades where you can have your driver, you can have a car lease. These are the different ways where you can do the tax saving and efficiency. Products comes under ATC, as I told you, PF, PPF, NPS, insurance policy premiums, NSC, ELSs, home loan principal. Sukanya Samriddhi is another one. A lot of people asking for the girl child you can have and the kids tuition fees. But if you notice, most of the time, always I can say ELSS is the better way to go. I normally recommend a ELSS because it's a minimum is 3 years lock in. Second thing is the way you get a power of compounding and your returns are in a capital gain, not added to the slab. Because whenever it is added to your slab, your post-tax returns are much lower. As I told you, this is the, you can choose what you prefer, but ELSS always give the better returns. So I'll just say that how the power of compounding with a market linked and getting a tax planning will always help.
Chinese bamboo is the world's tallest grass, which goes up to as high as 80 to 90 feet in a little over 5 years. When you sow the seed and start watering and nurturing it daily, you don't see it growing for 5 years. It would be frustrating, isn't it? But wait, miracle happens after 5 years. It grows from 0 to 80 feet in less than 90 days. Similarly, growing wealth through SIP also requires a lot of patience. Had you started an SIP of rupees 10,000 in September 2010 in large cap fund, the value of your total investment of 3.6 lakh rupees would have been 3.57 lakh rupees after 3 years. Had you stopped an SIP, this temporary loss would have been permanent loss. But had you continued an SIP at the end of the 4th year, your value of total investment of 4.8 lakh rupees would have been 6.95 lakh rupees. And if your SIP still continues till March 2019, the value of total investment of rupees 10.3 lakhs would have been 17.38 lakh rupees. Remember, correction is temporary, growth is permanent. So continue your SIP for long term to create wealth.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
So that's a way I was just trying to say how you can save tax money and earn more. So this is a dual benefit. How you can do the SIPs, that's a better way. PPF is always my favorite because I feel most of us don't know. Actually, PF is being subsidized by the government. And still that's why the 8.5 is coming. And when we are paying only 1800, it is actually, we are not creating a good corpus. PPF, that's why they have reduced, you can say, from 8.8 to 7.1%. But still 7.1 tax-free is a very good returns. If you're looking for retirement, there is nothing, you can have it. But yes, PPF and others, you can't do it more than 1.5 lakhs. So tax planning is good. But if you wanted to have a longer term wealth, it's always good to do the market link. So I'll just wind it up here with the saying that how you can increase the tax when you're doing it. If you have ATC 1.5 lakhs, you will save money there for 50,000 and above. You do a NPS 50K, 10% of the basic, please take care of it. Then again, you will be able to save around 5,000 there. ATD, you take care of your 25K plus dependent parents. Another caution here, I will just try to say that try to do as early as possible because your premium will be low. LTC is another. So if you are in 30% bracket, you'll be saving approximately 78K, which is indirectly increasing your salary of 6.5 and above. Here, I have not even taken I can say home loan and other things. If you do that, you will be having a much more. But please take the home loan only when you need a home, not because of tax saving part of it. As I told you, tax planning is links to the goal. You can have those investment for your retirement, for the kids' education, for your safety of your health, your life cover. These things can link to your goals and do the tax saving. That is the best part, doing both together. Tips for tax planning, as I told you, for the people who have a home loan, please take with the spouse, both can take care. Always do the tax declarations in April or how fast you can. Make sure you do tax proof by time. If not, nothing to worry. You can do the tax submission time as long as you have purchased before 31st of March. Look into some reimbursement policies for you, mobile, network, LTA, driver, car, food coupons. These are the different what normally people have it. Do ask for these, and if it is applicable, please utilize those. These are the points to remember when you're doing a tax planning because these are the notices that started coming very high. As I told you, saving bank, FD interest, you should show it, dividend interest. AIS versus 26 AS, I have already explained you. Lot many people says, Rachna, why I get an interest of 24 ABC when you are filing it across? Because as per the because I have earned whatever and that has been cut in my salary. But in the salary, you must have not told about your FD interest, or you must have not told any other dividend coming across, or if you have a rental income, these are not being considered. So 15 June, 15 September, 15th December, and 15th March, these are the which we call advanced tax dated, and 31st March is the last. So government expect you to pay on a partially everything's like that. If you have not paid, the interest starts from the next month onwards till your tax filing time. You will surprised to know that when the COVID time, when they have extended the time, but the interest is calculated till the time from the whatever the tax filing time onwards. So these are the points I am just talking. Whatever I have seen people getting notices and they missed because it's not a they didn't want it to pay, but they were not aware of. With this, I just like to stop it, and I'll be happy to take any questions.
Thank you, ma'am. I will be reading out the question. First question which we have is, which product is giving 6.8% of tax-free return for next 25 years?
There are many more tax planning side, but I was talking about that time in HDFC Sanchay Plus. But you will have it in a Max, you will have in a Edelweiss and the Tata. These are the four companies whom I have calculated. I have done on an XIRR depending on the tenure. 10 years, what I was talking about, and get 25 years is Sanchay is the best XIRR. Others will be little lesser XIRR, like a 6.5, 6.7, 6.8 is there. But some of the places where you pay for 7 years and 8 years, another company does better than Sanchay. So depending on what you are taking, these 4 5s are doing. So anyone who's taking these kind of it, please do XIRR, not deferred tax. This is the another thing I have been telling quite commonly, because a lot of people says, Ki Rachna, they are giving me 8%, 12% and all this stuff. Those are the single premium, deferred tax, deferred pensions. Deferred means I'm paying now, I'm getting after 3 years, 5 years, 10 years, and they will give the absolute interest from that year onwards. How much? Like, if, for example, if I have paid 10 lakhs and I'm getting 80,000, so they do 80,000 divided by 10 years, but they are not seeing the first 5 years you have not paid it. That also we need to take care as a concept level. Yeah.
Thank you, ma'am. The next question is, I have company quarter. Can I claim HRA benefit when my spouse stays in another city?
You have a company quarter is not allowed until unless your wife is earning another place. She's earning and she can claim for the other place. You cannot do it.
Thank you, ma'am. The next question is, I am 37-year-old. My home loan is over. My CTC is 18 lakh, and now I am planning to buy flat of costing 30 lakh with home loan of 25 lakh for tax saving purpose. Is this right way to save tax?
I thought you are speaking about Rahul. I'm
Yes.
37 year. I hold is over my 18. Now I'm planning to buy a flat is costing 30. The home loan is at 25 lakhs. So I'm assuming you already have a home already. So until unless you are planning to have a second house, there is a new trend has come. So I wanted to talk about you, Rahul. It's most of the time people don't like to do it a second house. Okay. Second house, even if you are taking at 30 lakhs, I'm just saying your rent may not come more than 5 to 10K. So the yield for the house is not more than, I can say, 2 to 3% or nothing. So it makes no sense much to have a second house until unless you say you are taking in your means native place for your parents or something. Otherwise, it doesn't make sense for it for just for tax saving.
Thank you, ma'am. The next question is, what is the rule regarding dividend income? Sometimes the company deduct TDS prior paying dividend.
So last, if I'm not wrong, it's last 2 years or 3 years back, the dividend income has been changed. Previously, dividend was tax free. Then they said dividend till 10 lakhs was tax free. Then now they say that dividend will be not cut at the source. So normally, I'm just giving example. If Infosys was giving a dividend, they will cut the dividend tax called DTT, and then they will pass it on to the investor that was tax free. Now, Infosys will not cut that 26% tax. They will give the full amount to the investors. And that dividend, they normally cut around 10%. In a COVID, they have made it around, if I'm not wrong, 7.5% tax. But any dividend goes above 5,000, only the TDS is cut. But you should declare the full dividends.
Thank you, ma'am. The next question is bank interest saving. How much is not taxable? On FD interest, how much is not taxable?
Bank interest, how much is not taxable, and FD, how much is not. So it depends on, again, people to people. Like if for on an average, the tax saving 20,000 is not coming under the taxable limit, but for the senior citizen, it is a higher 50,000 bucks. But for the normal, it is 20,000.
Thank you, ma'am. The next question is from Divya. One of my relation told her auditor suggested her to not invest in ELSS schemes as you have no enough money to show. Is it correct?
One of my relative
That
told
is the
her
query, I think.
auditor suggested her not to invest in ELSS scheme as you have not enough money to show. I'm not sure the question, but I'm assuming you're trying to say what proof you have to give. You can take the statement of ELSS, you will be able to show.
Thank you, ma'am. The next question is, I'm getting medical reimbursement from company for my parents. Can I claim it in HTT?
Reimbursements cannot be claimed, but you can buy the what you call insurance cover for your parents that can be claimed under ATD. I'm assuming your parents are dependent on you.
Thank you, ma'am. The next question is PPF versus this product, which one is better? I'm not sure.
PPF versus this products. Can you ask Rahul to speak out and allow him?
Yeah, I'm not sure which product is mentioned.
Yeah.
So let us next question. We'll allow Mr. Rahul to give the right. ELSS for 20 years or a growth mutual fund if someone is at 10%, 20% or 30% tax level.
For me, ELSS or mutual funds for a growth, irrespective of what may be your tax limit, is always best. So you should make sure that you do SIPs till 1.5 lakhs you can save for your ELSS, and the rest of it you can do in non-ELSS. The reason I'm saying it because ELSS are 3-year lock-in, but others are flexible. So in case if you wanted to redeem, you should have an option for.
Ma'am, I think Mr. Rahul mentioned the product of HDFC. So I think he's asking product of HDFC or PPF, which is better.
I will prefer product of HDFC versus PPF. The reason is PPF can change interest anytime as per the budget, but this is lock-in for 35 years. So this is like a known fact versus unknown fact.
Thank you, ma'am. The next question is bank FD and FMPS. Which one is tax efficient?
200% FMPs are always a tax efficient because it comes under the debt taxation with the indexation. FMPs was actually made only to get the benefit of indexation of financial years. Now FMPs are not coming much, but taxation versus FMPs are better because after indexation on an FMP, the effective tax will be coming around below 10%. As long as the FMP is for 3 years plus.
Next question is, I think, what do you recommend, mutual fund or ELSS?
So I think so. There's a question you're trying to say the normal scheme versus ELSS. ELSS is also a mutual fund actually. So yes, ELSS is only for tax savings, and anything above that you can do it any of the large cap, multi cap, and any other SIPs because that can be used for any other part because ELSS is being locked in. That's what I was trying to say. Both are okay.
Thank you, ma'am. The next question is, if company is not providing any LTC, any options for claiming on tax benefit?
No, that's a very, very common things. I wanted to do tax filing of the CAs. You will realize the HRA and the LTC should be part of your form 16. Otherwise, normally they don't take care. Even if they take care, you may get a notice.
Thank you, ma'am. The next question is, it is advisable to pay rupees 12,500 monthly on PPF?
As I told you, PPF is always good if you are looking for a retirement funds and all the stuff. But I, as a person, as somebody has, I think so Rahul has asked, or somebody, that you prefer the Sanche over this. Yes, I will prefer that because PPF is been changing. If you see last 5 years itself, it has gone from 8.9 to 7.1, and it may reduce further also.
Thank you, ma'am. The next question is, I'm having housing loan and property at a different place than my workplace. Can I claim HR and housing loan for tax saving?
Yes, you can.
Thank you, ma'am. The next question is, I have 7 years of service remaining, no own house, now buying house or investing in equity for next 7 years. Which is the best option for me?
It's a very emotional question, actually, Prabhakar. In India, we normally have a house as an emotional part of it. Okay. So if you ask me as an investment option, I will 100% will say to go to the equity, because I believe that multi-bull run is going to be there in the next 10 years in India, and we will doing amazingly good. But now, if you feel that you are planning to buy your own house for a self-occupied, it is still better option, because you may get a good deals when the market is not so means market is all time high. You can book the profit and buy the house, because getting in a house after when you're retired, loans are very, very tough.
Thank you, ma'am. The next question is, for 3 to 5 year debt fund or equity fund, which one is tax efficient?
First of all, tax efficient funds are only for an ELSS. If you are looking for a debt side, so there's another concept I wanted to put it across. Forget it, a tax efficiency. It is a debt and equity portfolio for your, I can say, portfolio. So 100 minus your age should be your debt. So if you are doing a debt portfolio above 3 years after indexation, it will be helpful, which will be again 8 and 9%, but your returns are also around 8 and 9%. But if you are doing an equity funds for 3 years plus, because the long-term taxation is 10%, similar tax, but you have a potential to go maybe around 10 to 12% returns. So depending on which side you wanted to buy the mutual funds, you should look at that. I just gave as I told you, I had a one meeting before this webinar, and he told me the same thing. So Rachna, my mother is around 78, and she wants to invest 2 CR, but I said that why don't you ask her to take an FDs, because now and FD rates are interest is so good, people don't want it to take a risk. And the best part of it, these rates may go down after a few months, so lock in for the longest time. So he says, no, my mom doesn't need the money, and bank, of course, FD is taxable because you everything is done. So I told them the same thing. The easiest way, if your mom doesn't need money, want a low risk and tax efficient, please buy the debt fund which invest only in the bonds. Okay. So the best is that you are getting the bonds, not direct bond, because direct bond will give you the yearly interest which is added to the income. So you will be having the tax efficiency with the indexation on debt funds after 3 years, and you are low risk also, and you are getting the similar returns as the bond. So I'm assuming your previous questions, I didn't realize the name, is the answer for that. If you are looking for a debt product for above 3 years, tax efficient, then FDs and anything, please buy bond MFs. So there is a MFs are there where you can have the bonds. They buy the bonds. You can go underline and just see that what are the bonds they have it. Buy the mutual fund which have the highest bonds, AA plus.
Thank you, ma'am. I will be reading out the next question, but before that, I would like to, run a poll. So, but I would like to, all the participants to participate in that.
Okay.
And let participants, submit their answer. I will be reading out the next question. The next question is, how important is the role of financial planner? Do we really need?
What is the question?
How important is the role of financial planner? Do we really need financial planner?
So this is the very tricky question. I always tell people, you need a planner when you feel the things are going out of your boundary. So I'll give you a simple example is, whenever in our house, I'm sure assuming the similar for everybody also, when you get a normal cold. Actually, no, I'm talking about Bangalore here now. Bangalore has been having a cyclone for the Chennai, and there was a raining last few days. All of us, including me, if you've noticed, I was just drinking hot water. I was having a cold, cough, fever. It's a very common thing whenever here continuous change of weather happens. So what we do normally, we just take a like a maybe steaming, or we do haldi milk, or take a kada kind of it. But when it goes too much on the third or fourth day, we say it's a time for go to the doctor and find it out. Is it something else required, or maybe we need an antibiotics, or we may need something, because they have been seeing similar customers, similar patients on the environment side, correct? Similarly, financial planning is also the same. So as long as you have a portfolio, you are able to manage, you are able to take care, you are following them very clearly, when to exit, when to enter, you are taking care of a debt and equity, it's perfectly fine. Please do it yourself. You don't have to worry. But things goes forward. I'll give you example why so many people who used to do themselves, and they came and they started. And another person whom I'm talking last 1 week, a very senior person, 55 years old, going to retire in 3 years, CXO of the company, said, Rasna, I was doing managing, but I realized that my goals are not met and I'm not able to achieve. So I think so now onwards, I have to be very careful that my portfolio should take care of my full retirement till 85. So I said, fair enough. So why after certain point you realize you are not able to manage, that time you need somebody as a financial planner, an advisor, or a guide. It can be anyone, because the difference between you and me is we don't attach the emotions to the portfolio, and when we manage our own portfolio, we attach. Even though I being a myself as a, I can say, planner, I always says, okay, you should be able to take this call or not. So I don't take a call, because Anil has been good in market, and that's where his strength is. I go and ask him, do you think we should do it in this profit booking or other things, exit on our own personal portfolio. So it is always good to have somebody take a rational and logical decision on your portfolio than this. So sometimes most of the time, I can say, why sometimes, lot of time we take the things what is in a noise, what our friends and family members are doing. I have, if somebody is regular to my presentations, you must have seen last 1 year, a lot of people have come back and asked me for a crypto and others. Okay. I have never done it. And I keep saying, if you want to try it out, please do it yourself. And then don't put so much of money, because it's impacted. And when one person came recently, he said, no, I have put 1 CR because my friend says it is going in a multiple of 50s. And now he is having 20 lakhs, and then 20 lakhs has also become zero. So sometimes we try to do many things because we may trust that person's advice. And I am 100% sure that friend has never have a wrong intention, but he didn't have that exposure. So sometimes it's good when your portfolio goes above certain time. You wanted I can say, a person who is bouncing your thoughts or bouncing your ideas. It is coming correctly or not. Yeah.
Thank you, ma'am. Next question is, what should be the ratio in NPS as equity, corporate bond, government security?
So NPS highest gives only 70%. So please continue 70%.
Thank you, ma'am. I will be reading out some more questions which we have in chat box. I have no car loan and house loan. CTC 6.6 lakh. Only ELSS 1.5 lakh. Much get food voucher to save tax. I'm not sure what you know.
I have no car loan and the house loan. That's a very nice of you that you are debt free, and you have a 6.6 only ELSS. So one thing is, I can see you from here. You are already as a tax free should be zero. So 10 lakhs and below, most of the time with your ELSS or ATC, you will be almost like a tax zero. So your tax planning is already been done.
Thank you, ma'am. I will be reading out the next question.
So NRI moving to India, how to take care of a taxation? It depends on that they are coming permanently or they are just coming as in between. Because I can tell you, I'm just again this person who has come from US only, whom I had a meeting before. So they have different things, especially in US and Canada is a different FATCA, and other countries are different. You can have an RO. The taxation doesn't change. Only change is that your other country, the double taxation is taken care or not. Second thing is you have to make sure that you are investing as an NRO or an NRE. So these are the things, but the tax concept doesn't change. Only changes what are the schemes. Like for a US based, we cannot give some schemes. Okay, and they have a limitation to the scheme. Like a Sukanya Samriddhi cannot be taken by the NRIs. So it depends, but 90% of the things, whatever I have spoken, it works the same way on a taxation. You have to apply tax filing here also and your resident wherever geography it is.
Thank you, ma'am. We have one question. I'm 33-year-old female having annual CTC of 30 lakhs. I'm planning to buy my first 2 BHK home for 70 lakhs. I have no other major liabilities other than ELSs, SIPs, FPs, and rent in FTC and HRA respectively. Is buying a home is a wise decision?
Yes, of course, it's a good option because you're buying the first, and it's a very emotional way because you're starting your own. And I believe that it is good but I'm assuming your FDs are only to the tax for a contingency plan, not much. Otherwise, you are increasing your tax. If you are a CTC of 13 lakhs and taking care of ELSS and the home loan, I am sure you will be in a tax free already.
Thank you, ma'am. The next question is, shall we invest in index fund and what are the ROI?
So index funds are normally are called a passive funds. Normally it is in developed countries, it's very good because their fund charges are low. But as on today for us, developing country, the passive funds are little lower than the active funds. But most of the time, index funds or anything so will give you the ROI is the same as your index. So I am assuming if I take it as a word as a Nifty is average is giving around 14.1 to 14.5 in 10 years. So you will get the same 14.5% returns.
I think we have two more questions that we can do. Shall we invest in index fund? Should we increase our contribution in company PF or open PPF?
It's a very good question. I didn't take that part of the question when I was going through. This is another person who came and told me I was talking about, no, he's 55 and he was about to retire. Their PF was around 1 lakh a month. So 1 lakh is his money, 1 lakh is company's contribution. And I asked how you are giving this much money because sometimes you are not realizing above 20,000 or 21,000 per month, it's a taxable. Okay. So this new rule has come, which is 2 years back, implemented in this year. PF above, if you are together PF and PS and what you call VPF, anything is going above 7 lakhs is taxable. So indirectly, you can have 12% anyway, not an issue. But whatever you're going to return, so if you notice there is a few articles has come, nowadays PF will have the two entries, tax-free returns and taxable returns. Okay. So I will always prefer, previously it was good, I'm not denying it. But now I feel if I have 8.5 and I'm paying the tax of 30% there, I better put the same amount in SIP and get a better returns because anyway PF is also for long term and SIP long term will minimum will give you 12% return. So that's why I will prefer that. But yes, PF, PPF you can increase only till 21,000. That is my recommendation.
Well, we have one question. NPS can we continue till 70? Currently I'm at 58.
What's the question?
Question is, like NPS can we continue till the age of 70? Currently, I'm at 58.
I'm not sure of the new rule, but I thought it is allowed NPS till 60. But I will get back to you. Please write Sanjay a mail or ask him to write the mail to us. I will reply. I'm not so sure of the last.
Sure, definitely. Mr. Anup raised his hand. Can I allow him to talk?
Yeah, please.
Yeah, Mr. Anu.
Yeah, Anu, tell me how I can help you. Can you hear us?
I'm not sure.
Hello.
Yeah, Anu, tell me.
Good afternoon, ma'am.
Good afternoon.
Hello, I am audible, ma'am. Hello.
Yes, I can hear clear. Please let me know how I can help you.
Ma'am, I got to know that I am investing in NPS,
Yeah.
50,000 plus 10% from corporate, from my deduction from my salary as a
Okay.
corporate deduction. But in NPS, madam, tier 1, there is a locking period. After up to age of 60, you cannot withdraw. Is it there is an option we can withdraw the money for the requirement?
I will check across the on this part of it because NPS again new rule has come around 3 to 5 months back. Anup, if you can send me across, but previously it was allowed till 55 and you can withdraw it.
Till 55, ma'am.
Yeah. So I will
Ma'am,
just check it across recently because tier 1 and tier 2, the new rules has come. I am not so aware of. Even though I do the NPS for both as an employer, also 10% of my basic, and I do the 50,000 both. But I will not so sure of that. I will get back to you.
Ma'am, it is a good investment, but locking period is too high. There is a no condition to
That's what I'm
highly
saying. It
withdrawal
is
for that
supposed to
purpose.
be done only for your retirement. If it is not for a retirement, it doesn't make sense because the bad part of this is 1/3 is the only tax free, the rest is also taxable when you get it.
Yeah, that. And one
So
more
I
thing, ma'am.
recommend it because you're getting a tax benefit at current. Otherwise, I must have not even recommended that also because you are saving 30% in the this time when you are paying that year. That create a good XIRR. Otherwise, getting the money taxable is not makes much sense.
And one more thing, ma'am. What is the limit of ELSS for tax saving under
1.5.
HDB?
So the claim can be done till 1.5, but you can invest even 1 crore also in ELSS. There is no limit in ELSS. But for a tax planning, is only 1.5 you can claim. That's a maximum.
And ma'am, for ELSS, locking period is 3 years.
3 years.
So after it will continue or will
No.
change the plan?
So the scheme can continue, but the lock-in period is not there. You can redeem if you want.
Okay. Thank you, ma'am. Okay.
Thank you. Bye-bye.
Thank you, Mr. Anu. Ma'am, we
Can
have
government
one or two
people
questions.
can invest in stock? That's the last question I said. It depends on which government. If in army and navy and air force, not allowed, but other government services, if I have heard of, they allow, but they have to declare what they have been buying. I think so. Mr. Naveen has raised the hand. Can you allow?
Yeah,
Sanjay?
ma'am. I think he's asking regarding this.
So let
SWP
me
plan.
take the last 2 questions, Sanjay.
Yes, ma'am. Sure.
And
Can
for
I allow Mr.
everybody, it
Naveen?
is so nice to have you. Last 2 questions I will take, but before I leave, I want you to have a wonderful weekend. Compliment the seasons, enjoy your vacation, have best time with your family. In case if I am not able to hear you the next, because I think so the next session I'm going to take it in January first week. Yeah. The 2 questions, can you take it?
Yeah. Can I allow Mr. Naveen to talk?
Please, please.
Yeah, Mr. Naveen.
Hello, madam, can you hear me?
Yes, please
Yeah,
tell me.
very
how I
nice
can-
session, madam. You have given a very interesting points for us to note.
Yeah,
One more
thank you.
question, madam. I am at the verge of retirement. I am at 58 years old. The
Okay,
more or less whatever you have given the planning, I have already planned.
that's
But
nice.
many of the corporate planners are advising me to go for SWP. At
Yes.
least 50% of the corpus could be on FWP. Apart from this postal saving, Prime Minister Vyaya Yojana, and all other fixed income retirement bonds like RBI bonds, remaining to be kept at least 50-60% on SWP. Is it market attached, madam? Is there any risk in SWP? People are telling it's a debt fund. There is no risk, even though returns are only around 6%. The withdrawal, monthly withdrawal is going to be fixed for a long time, protecting your corpus.
So Naveen, what they're saying is right. So let me. Hello,
Yes,
can you hear
Madam,
me?
yes. Yeah, I can hear you.
So, yeah, so what they are saying is right, SWP. So what we also do for the people who are just about to retire, we take, I'm just giving example, if somebody give me 1 crore. So on an average, I can say that 1 crore, you should take around 6.5 or 7% returns, okay, on an overall 1 crore. So let us say 7 lakhs will come, correct? 7 lakhs you divide into the number of months, which will, let me see for a round off, it's 6 lakhs divided by 12, it is coming up 50K. So 50K, I will take it as an SWP from the fund, which will take care of the next 3 years. So 6K into 18 lakhs. So I will put around 25 lakhs in a debt funds, which will take care of your next 3 years of SWP. The rest of the amount, which is around, if I'm saying 25 lakhs, 75 lakhs, I will divide into two parts, which is called a balance and hybrid funds, and rest is the equity funds, which will give you the good little returns, and that you will move as and when your SWP debt funds are getting over. So these three baskets will give you better than FDs. It will give you more tax efficient because it's a capital gain. But if it is on a debt, you should always make sure your SWP comes from the debt funds, and you should have minimum any time for first 3 months, 3 years, you should have it in a debt funds. So the longer time when you're having equity that is giving more, so it will go to the debt funds over the two-step process. So that's the way we have been giving, and I'm assuming whoever is recommending will be recommending the similar way. Don't take SWP from the hybrid funds or the equity funds. It may erode your principal faster.
Okay, got it, madam. Thank you.